Hello and welcome to Africa in 10 minutes, where we bring to you trending business news from around the continent this week, courtesy Footprint to Africa. I am Mike Mesikeno. It's great, as usual, to have you on the show. And now let's take a look at the highlights for this week. Toyota Tsusho wants 30% of revenue from Africa by 2038. Japan and Nigeria sign MOU on infrastructure investment. West African crude oil swaps commenced by ICE. Kenya says IMF standby loan deal is over. Little chance Moody will downgrade South Africa's investment grade credit. And now the news. Over the next 20 years, Toyota Tsusho Corporation's African head wants the company to deliver 30% of a Japanese conglomerate's revenue, up from 10% as it is now. Now, to get access to businesses ranging from retail to healthcare across Africa, the trading arm of Japan's Toyota Group bought a French distribution company, CFAO, in 2012. The businesses have now been integrated into Toyota Tsusho's operations, which was mainly involved with vehicle sales. In reference to Africa's contribution to Toyota Tsusho's annual revenue of $60 billion, CFAO Group Chairman and CEO Richard Beale said in the coming 20 years, we should increase from 10% to 30%. The goal is based on forecast, which shows Africa's population will account for a third of the world's population by 2050. A memorandum of understanding has been signed by Nigeria and Japan to promote quality infrastructure investment between both countries. Rotimi Amechi, Nigeria's Minister of Transportation, and Japan's State Minister of Land, Infrastructure, Transport and Tourism, Tsukasa Akimoto, signed the MOU in Abuja. Amechi acknowledged Japan's interest to partner with Nigeria in infrastructural development is a welcome idea. According to him, you have identified the infrastructure deficit that is huge. We are a developing country, so there will be huge infrastructure deficit, and it offers Japan and Japanese investors opportunity to come in. The minister said the country also welcomes American and Chinese investors. He explained that there are two types of investments that the government encourage. There is one we ask government to government for a concession in loan, and usually the concession in loan interest rate is about 1.5% interest rate. So we will be glad if the Japanese government can come in as the Chinese government have come in. The first set of derivatives linked to the West African crude oil market was launched by the Intercontinental Exchange. Now, this initiative was aimed at an industry that has called for a strengthening of a dated Brent benchmark. Reuters reveals that traders will be able to use the ICE platform from September 17, 2018 to trade a derivatives contract linked to Nigeria's four largest crude oil grades: Bonny Light, Forcados, Kwaibo, and Bonga. According to a note on the ICE website, the cash-settled feature will be based on a daily assessment by printing agency S&P Global Parts for a WAF index backed by the four grades, each of which will carry a weighing by 25%. The contract will represent 1,000 barrels of oil, which will be based on the differential of the four crudes to the dated Brent benchmark price. Dated Brent, currently underpinned by 5 North Sea crudes, Brent itself, Forties, Osberg, Ekofisk, and Troll, accounts for less than 1% of the roughly 99 million barrels per day of global oil production. In an interview with Reuters, Kenya's Finance Minister Henry Rotich said Kenya's standby loan deal with the International Monetary Fund has expired. He, however, noted that the country will continue talking to the fund to discuss funding facilities it can access in the future. A 6-month extension was secured in March 2018 for the $989.9 million arrangement agreed in 2016 to help cushion the economy in case of unforeseen circumstances that could upset the balance of payment. The deal included a standby credit facility of $494.9 million, which expired in March, but no funds were taken out. Rotich noted that the expiration was not unusual since Kenya had participated in many of those programs over the past 15 years. He said, "There is nothing unique about any program ending. I think what's important is we did have a very successful 2-year program which is now coming to an end." The central bank was forced to intervene through the sale of dollars to banks in the afternoon when the shilling weakened by 0.3% after the news of the expiration of the facility with IMF was released. Reuters reports that some respite after the economy moved into recession was given to President Cyril Ramaphosa when Moody's Corporation, an American business and financial services company, said there was little chance it would strip South Africa of its investment-grade credit. Moody, however, noted it was imperative for South Africa to keep its finances right for the rating to be kept for a longer term. The company said recovery will be slower than the Treasury's estimate of 1.5% growth for 2018 after a surprise contraction in the first 2 quarters. In an interview with Reuters, Lucy Villa, Moody's lead analyst for South Africa, said growth is going to be below 1%. To what extent, it's difficult to say. She, however, dismissed the idea of a possible downgrade at a review scheduled for next month. She noted that South Africa has a stable outlook. There's little chance of a rating action. Lanla Nene, South Africa's finance minister, also said South Africa was committed to implementing a prudent fiscal policy aimed at stabilizing the ratio of its debts to gross domestic product. Nene also assured that the government was working on a package of measures to stimulate economic growth by reprioritizing existing resources. Ghana's oil and gas sector will maintain its position as a key driver of growth in the domestic economy, the Oxford Institute of Energy, University of Oxford, has said. In a new report titled Ghana's Oil Industry, Steady Growth in a Challenging Environment, the institute said with some of the country's challenges solved, such as maritime border disputes with Côte d'Ivoire, the industry is expected to retain its position as a key driver of growth in the domestic economy. This is expected to generate revenue for the national government and as gas production comes on stream to alleviate a long-standing electricity shortage, it adds. It further noted that unlike many producers on the African continent, Ghana's oil industry has advanced at a steady pace in recent years despite a drop in international oil prices. And on that note, we draw the curtains on this week's episode of Africa in 10 minutes. Toyota Tsusho wants 30% of revenue from Africa by 2038. Japan and Nigeria sign MOU on infrastructure investment. West African crude oil swaps commenced by ICE. Kenya says IMF standby loan deal is over. Little chance Moody will downgrade South Africa's investment-grade credit. You can send in questions, make comments, and keep up with the news on our various social media channels. Subscribe to our YouTube channel, like our Facebook page, follow us on Twitter, and connect with us on LinkedIn. Visit www.footprint2africa where these stories were called from. Footprint to Africa, business news made in Africa, by Africans, for Africa.